Hello traders, Mark Grrowth here from Flipside Trading. It is Sunday evening, June the 7th, and let's talk about the markets. Hey, they're bullish. The sky's the limit. The NQ set a new all-time high. The sectors we talked about that we're looking for to confirm the move, that definitely happened. We had triggers on all of them. Therefore, as you might expect, the overall dashboard is bullish, but we definitely have some let's say a point of maybe potential pause that we potentially are a little bit overbought, and there's some technicals to kind of support that. And we'll take a look at the new economy that we've talked about and the overall performance over the past 3 months since the coronavirus hit. So let's dive in and check out the charts. And let's go here. Okay, so what we're looking at here is the Nasdaq futures. As you can see, we've broken the new all-time high. Right, from here, we come across, close the top, very convincingly. But the reason that we might want to have a little bit of a pause is because of what we're talking about from the symmetry. If you remember, right, what we'd like to do is look at symmetry, look at this symmetry and then extend it here, and it gives me the 1.27 extension. And at this point in time, it wouldn't surprise me if the market kind of held, bounced back a little bit, off this all-time high before resuming upward. So, another day or two consolidation wouldn't be a surprise. Now, the key thing is to watch, and you'll see this in all the indices, is this yellow line here is the 8 exponential moving average, and as long as that holds, well, then you know what, you're going to be bullish. Now, if we start to see some separation between the 80 EMA and the 21, then you have a potential pullback either here to the top of value or here to the 21. I think a good example of that is, let's look back here, right here, right? We have this great channel, and the distance, in that channel pretty much remained the same for a number of days, right? So this distance, this distance, this distance, and then all of a sudden now we have this bigger gap and this bigger gap, and then that tells you that the market is potentially overbought, looking for a pullback. And you can see when we broke the 80 EMA back on the reverse side, that's where we went to. So keep that in mind as a potential support area or pullback before the index resumes its journey upward, assuming that all the current economic conditions remain relatively positive and relatively the same. The same thing is, let's look at the S&P 500. Right, we look at the S&P 500. We broke through this this key level here, the 786 retracement. We're coming up right now to the 3240 area, which is basically R1. So that's going to be key to see whether or not we kind of push back. Again, right, you have the 80 EMA. Right here with the 21, we have a pretty good, say moderate separation, but it's starting to lengthen a little bit. And if it does, potentially look for this to pull back before it resumes. Now, we said that in order to get these all-time highs and see what's going to happen is that we needed some other sectors to confirm. And one of those was the small caps. So let's take a look. So the small caps, right, they did confirm. Right here is the overall resistance level that we flagged last week, right here. Well, we broke that level, and we broke through the 200-day moving average. So to see us kind of push up this 786 or bounce between the 200 moving average and the 786 retracement is a definite possibility. Now, also we said that the financials, right, that the market can't go anywhere without financials, and the financials. And look at it in terms of XLF right here. You can see they triggered the overall resistance level that we flagged between here and here, closed the next 2 gaps. But look where we are, right up against the 200-day moving average. Again, this is kind of a technical area that usually accounts for some type of a pause. And the same thing, if you look at the transports, we said they needed to trigger. Oh, here we go. Transports. Yep, same thing. Okay, we broke this overall resistance zone right here. Let me give you a better arrow. Here we go. We broke that zone right here, right, and up, and where are we? Right back the 200-day moving average. So we go in again to look at, from a commodity standpoint, we talked about copper, right? Copper again broke the level that we're talking about, and let's see, right through here. All right, and again, where are we coming to take a little bit of a rest? 200-day moving average. So given that the index is overbought, given that the confirms and kind of the laggards, if you will, that we were looking for to trigger have triggered, but they're at their 200 moving average, I kind of wait to see that these things, get up and above before I saw another, as you say, next leg up where I would start committing new funds. At this point in time, I really look at, again, taking some profits, letting some winners run, and maybe, tightening some stops as we go forward. Okay, so the next thing we'll look at is, our overall dashboard. And if you look at our dashboard, we'll go back to the web area here. And one of the key areas that we talked about last time is this overall on the breadth, is we had some, we had this area right here, and this is at a kind of an all-time high as well, right? It's high here and high here, suggesting that the SPX is a little bit overbought. Again, another signal for a pullback. But the overall confirmation that we had is that the number of stocks above their 200-day moving average did cross this key 50 line, this key, resistance, and overall to trigger. And again, our on-balance volume is up. So that was definitely confirming. That was worth checking out. That was different that we didn't see last time. The other thing we want to talk about is the rest of the world, right? We always said that when the rest of the world goes ahead and breaks this 50 EMA right here, is that usually serves as a catapult trigger, right? Kind of a follow-on boost for SPX. And that's what we're seeing right here and right now. So as long as the emerging markets stay above this level, now they're actually being a helping instead of a hindrance, right? They're kind of, we're breaking through that overall, anchor, if you will, of what's happening in the rest of the world as the outlook for the economy and the world economies looks a little bit brighter as things approach some semblance of normalcy given the COVID-19 pandemic. So here, the same thing, what we talked about, we were really concerned is that potentially at this juncture that we were going to have a divergence and that could have brought us back down. That didn't happen. We kept moving forward, right? We broke this, resistance level. Again, confirmation on the technicals. We moved down a little bit further here. There's only a couple more I wanted to take a look at. Okay, so one of the big things that we saw, right, is now we had basically the Russell, which is the small caps. We had our finance, our transportation sector, and our two commodities, start to make a move. So now we're seeing a change from the overall growth, right, to those sectors, and those sectors are more or less value, okay? So now we're kind of rotating out of the big growth, these value sectors. So that may continue a little bit longer. And as you can see, the SPY is definitely, not at all-time highs, but it does have a little bit more headroom, and that is the path of least resistance to move forward. So some of those profits that you take, in your growth areas, you may want to consider putting them into value, because you can see here we got value divided by momentum. Okay, momentum, the denominator is getting smaller. That means value is getting bigger. It's showing a little bit of rotation. So that may be an area, to at least dabble in. I wouldn't go full force because as we've shown that the confirmation sectors are up and above the 200-day moving average. And just a couple more things right here. Wanted to take a look at, BDI is getting close, right? We talked about this is the Baltic Dry Shipping Index. All goods are shipped, right, over some type of water transport, and we're just coming up to the resistance level. And last but not least, of course, is the VIX. As we talked about, the VIX actually, broke a little bit lower. Can we go even lower? Maybe we can. But again, this also looks like, we look at this drop here, right, kind of parallel about to this drop here, that we seem to be kind of, some symmetry and I think it might be time for not necessarily a pullback, but at least some chop or a bounce, at least some consolidation. So definitely something to consider. Again, okay, high yield bonds versus corporate bonds. What we're seeing is risk on, baby, right? Everyone's looking to refinance to gain letters of credit. That's happening. They're issuing bonds. I think they issued over $35 billion worth of high yield bonds this week, and of course that people think that all these, I'll say, the solvent companies not looking to go to bankruptcy, need a leg up and then need a bridge, and so investors are willing to make the bridge with the idea that the economy will start to continue to gain speed and move forward and generate, should we say, a faster volume of money supply, such that more transactions are happening throughout the economy. And last but not least, I think we're good. Yep. All right. So the other thing we want to talk about real quickly is the new economy. And if we take a look at the new economy, and we take a look at a 3 months, right? So that's March, April, and May. Here we are into June. And you can see here that we've put the SPY in from an overall comparison. And where is the good old SPY? Here it is, the SPY here. And the key number, we've sorted this by overall percent change. And you can see that kind of the funds that we talked about from an ETF standpoint that were kind of the pinnacles and the mainstay of the new economy, that the bulk of them, during the past 3 months actually did outperform the S&P 500. So, that's good shape. That's good news. Obviously not everything happened, right? XLV didn't happen. Energy and finance were not, okay. Two areas that we looked at. They were the confirming areas, but I wanted to put them in so we have at least a reference of what's happening. I did want to mention this new ETF. Okay, we talked about, kind of these being, key growth areas here. And we might see a rotation from growth into something a little bit more like the SPY. And so that might be a good place to place dollars. The other area that I've really kind of looked at is bets. And basically this is online gaming. And I think that as sports start coming into play and you cannot actually attend and you'll be watching at home, that people are going to kind of take that next step. And this online gaming, online betting, real time, where you can bet on, score at the end of the quarter. You can bet on different plays that are happening. I mean, a lot of people saw this when the Peyton Manning, Tiger Woods versus Phil Mickelson and Tom Brady. I mean, there was a line on every single hole. I think this is kind of the new adult entertainment. I mean, even though Hero, which we talked about before, which was some of the gaming, they did pretty well. You can see them. You see them up here. I think you might see a little bit of a switch. So this is a brand new ETF. It's only, I think, just opened up last week. So it might be something to keep an eye on in the future. And, you can see, I guess, to really highlight the shift, if we just look at, okay, this is the 3 month, and we've shown that, kind of that the new economy, definitely outperformed the S&P 500. But let's just look at, the last week. And if we look at the last week, we definitely had some sectors that outperformed, but here's the SPY, right? You can see it has moved up, right? Before it was down here kind of in the, at the bottom third, and now it's kind of up here on the top third. And you see that our solar energy, our e-commerce, and our iBuy, iPay, the semiconductors, which is really kind of the new currency or kind of the new Dow transport theory of the new economy, iRobot. And then we had, obviously big jumps here in our confirmings, our XLE and our XLF. I will be honest, I did not, take any of these trades, once they triggered. I was still managing the growth piece, but now I'm going to take a little bit better look at some of those value names going forward. Okay, guys, that's it. It's short and sweet. Hope you had a great weekend, and hopefully the market will move in the same direction. And I hope that everyone is doing well and that everyone's staying healthy. And we'll catch you on the flip side.